Start the recording first. There we go. As said on the PowerPoint, today's PowerPoint, we're going to be going over PitView trading methods, some very specific PitView trading methods for using. We've talked quite a bit in class about using PitView as a confirmation tool for your existing trading strategies. However, as you get more in tune with PitView and people that want to look for higher probability opportunities in the market, what they'll often do is use PitView. Much like a lot of indicators in the market, when people learn a good high probability indicator or a good high probability tool such as PitView, which allows you to trade along with the market makers, and hopefully by now you have a solid understanding of just how simple PitView is and how simple it can be to trade. There are a lot of just standalone entry methods in which you can use PitView to enter the market. Now I pulled the PowerPoint back up, but we're gonna quickly switch back over to the MetaTrader here, because one of them we actually discussed last week doing news trades, which was looking for entry opportunities off the news trade. Now, for those of you who weren't in class last Monday, we were talking about the European Central Bank announcement because the subject was news trading, if you will. So we had two different methods for trading the news when it came to the European Central Bank. And just to make a long story short, Mr. Draghi did not disappoint as far as his dovish comments in the market. It was a bit of a weird announcement in the fact that Draghi came out in his press conference at 8:30 a.m. and he talked about how they were going to be starting asset purchases in mid-October and how they were going to last a lengthy amount of time, like for a minimum of 2 years. So that was obviously clearly dovish. Whenever a central bank comes out and says, hey, we're going to start printing money. We're going to start printing money to try to stimulate the economy. But the thing was is that Draghi then said I believe it was at about 10:30 a.m. Instead of listing all the things that they were going to do from their asset purchases, they said, well, we're gonna actually come out at about 10:30 a.m. Eastern, which I believe was somewhere around like 14:30 or 15:30 London time, if you will, like 3:30 London time, to announce what the details of the asset purchases would be. That was a little weird because I'll usually come out and talk about all of that right during the press conference at 8:30 Eastern. So we had two PitView methods for trading the news announcement. Our strategy before the news was starting at 8:25 a.m. Eastern time. Our sell entry was going to be if the 5-minute and 1-minute pair view totals both show a -20 imbalance, we were going to sell it at the market. We were going to put our stop 50 pips away from the entry because, as we all know, whenever there's a European Central Bank interest rate announcement, we all know that it's always good for a large amount of pips. So we were looking for a large amount of pips in a short period of time and a limit of 1-to-1 risk reward. What we were looking for was taking sells only. One of the reasons for that is not only the long-term trend favored euro weakness and dollar strength, expecting dovish comments from Draghi. I went through a little bit of why I look for dovish comments from Draghi also last Monday. However, you know, what it also boils down to is if you look at even global view or our new total view, they both were showing, you know, obviously longer term euro weakness and dollar strength. So one of the reasons why we wanted to take sells only was because of the fact that it matched up with PitView's longer term trading trend, I should say, prevailing trend on the euro dollar. So if this does not occur before 8:30 a.m., there was going to be no trade. So when you're looking at the actual totals during this time frame, as I was on the euro dollar pair, and remember this was on the euro dollar pair, the 5 and 1 minute totals did not get to a -20. So this was not met. The 5-minute and 1 minute totals did not show a -20 imbalance. Now, before you start saying, oh, so we didn't get a sell order, just to show you the power of what PitView does for you, we didn't get a sell trade before the news. Remember, we had two different strategies. One of them worked like freaking clockwork. That it was by far just a perfect trade. The before the news trade did not execute, however, which is a good thing, because with some of the confusion surrounding the announcement here, let me go in and show you here. Right in here, okay, here, let me put a line at when the actual announcement came out. Right here was when the announcement was this red line going up here. Right here, this was this was the actual announcement itself. 5 minutes before the announcement at 15:25. Okay, so these little 5 bars right in here, these were the 5 minutes in which we were looking to take a trade. And as you all know, we were only looking to take a sell trade. Well, just to show you the power of PitView, we didn't get a sell entry because the 5 minute or and 1 minute, neither one of them, well, the 1 minute did briefly, but it wasn't confirmed by the 5 minute. So both the 5 minute and 1 minute totals did not go to a -20 imbalance. So that we did not get an actual sell trade before the announcement. Now, if any of you are wondering why that's a good thing, it's because it did go down. It went down a little bit right after the announcement. This big red candle here. I can go ahead and take off this line right here. It did go down briefly, and I'm talking it went down about maybe 15 pips right from the announcement, and then it went right back up, came right back down. Obviously we didn't get a 50 pip total to the downside, but it slowly went right back up. And over the course of the next 20-25 minutes, obviously, we went up about 70 pips to the upside on the euro dollar. And we were only looking for sell trades on this. Now, that's the power of what this can do for you as far as a program. This kept us out of a sell trade. A lot of the market was looking for more bearish comments, and we were looking to trade along with the prevailing trend. So this kept us out because the market makers were basically telling us before the announcement came out, when you look at the liquidity provider action on the 5 and 1 minute, they were saying, you know what, we're not heavily selling the euro dollar right now. Now, before you get bent out of shape of, oh, we didn't get a trade, we actually did get a trade. We got a perfect trade on Thursday morning during the ECB announcement, because that was our first trade, was looking for a sell entry before the actual announcement. However, what we also were looking to do, it was enter in after the news came out via what we call a retracement. And again, we're still looking at 1 minute charts on here. We're still looking at the 5 minute and 1 minute pair view totals. And anytime after 8:30 a.m. Eastern time, we were looking at selling. So after the announcement came out itself, our thought process was, if the euro dollar makes an extended move up, we're going to go ahead and look for another opportunity to sell it if it makes a 50 pip move to the upside. So our trade filter on this was, if the euro dollar goes up at least 50 pips from the pre-release price, so that's the price right before the news comes out, look for a retracement entry. And we were still going to look to sell at the 5 minute and 1 minute pair view both show a -20 imbalance. We were going to sell at the market. So, but it has to meet this parameter first. It has to move at least 50 pips to the upside. This was a perfect news trading retracement trade on Thursday, and I'll show you what that looked like on the chart. I mistakenly copied the 1 minute total twice, but when you see the 1 minute total imbalance, you'll see how drastic it got once the euro dollar went up by at least 50 pips. I'll show that to you here in just a second. We were going to place our stop at least 1 pip above the peak high. We were going to look for a 1-to-1 risk-reward ratio. So right after the announcement came out, this is trading clockwork right in here. Now our pre-release price, let me take these off. There we go. I'll take that little red X. Now here's our pre-release price right in here. This red candle right here, this was the announcement itself at 8:30, and here was the pre-release price. And so in order to trade a retracement, we needed the euro dollar to go up at least 50 pips from the pre-release price. So if you take your little arrow here on the MetaTrader platform, and you see that middle number right in there, that shows you what the actual pip gains are. Right here, you see right here, this red candle or this green candle right here, that was our 50 pip move right here. You see where my crosshairs are. That was where the 50 pip move was met, right on this long green candle. So right here, we could have, right at where this red line was, when it made this 50 pip move up, this is where we could have started taking sells on the PitView. This is where we'd have started looking at PairView to look for our sell entries. Because obviously PairView was actually showing some pretty strong buy imbalances up and through here, but the thing was we didn't want to go against the prevailing trend from global view and total view. We wanted to look to short on here. Plus we were kind of bearish on what Draghi was going to say anyway. That's kind of the fundamental guy in me talking. So what we were waiting for was, again, we were looking for the PairView totals to go to a negative 20 on the 5 minute and a negative 20 on the 1 minute. I can show you exactly. I'm looking for, let's see here, where's 1622? And it's right in here. So right in here, about 1622, let me take you to the PairView totals. I copied them down. I got them in my little photo viewer. I did something on accident though here. Instead of, here we go. On the 1 minute total and the 5 minute total, instead of copying, I copied the 1 minute twice, thinking it was the 5 minute and 1 minute. I had them both up on my screen. Here's the 1 minute when we actually, it started going to negative 23 and then it went to a negative 55. The 1 minute went drastically to a sell imbalance. After it hit off these peak highs right up in here, it went to a negative 55. The 5 minute, the reason why I mistook this 1 minute right in here for the 5 minute was right before this happened on the 1 minute. This is where it was, and I thought I had copied down the 5 minute totals, but this is approximately where the 5 minute total was too. If you were watching this, you know exactly what I mean. The 5 minute went to like a negative 21 or a negative 22. Something along those lines right in here is when it happened. So you would have gotten a sell entry on this right in here, if you will. This as sell entry right in here would have been when it went to a negative 20 on the PairView totals. Your sell entry would have been right at 1.26760, right around in there somewhere. So 1.26760 would have been your sell entry. Which would have been right at about this green arrow right in here. Your stop would have been placed at least 1 pip above the high up in here. This high price right in here was 1.26905. When you account for spread, which would have been about 2 pips at the time, let me put this up here. Your stop would have been about 1.26945. Your risk, if I do recall, would have been about 18.5 pips. You would have been risking right here at the top from your sell entry, which was right here, to the top right in here. It would have been about 18.5 points of risk. If you were looking for a 1-to-1 risk-reward ratio trade, this would have easily hit 1-to-1 risk-reward. I'm talking like you wouldn't have had to be patient with this trade. Let me just say that. You would have hit your 1-to-1 risk-reward, meaning if you were risking 18.5 pips and you wanted to make 18.5 pips back, you could have easily hit that within. We all like it when we make a quick 18 pips or you know, almost 20 pips worth of movement within a matter of what, 5 or 6 minutes. You would have never been really stressing out about this trade. It may have gone against you by maybe 3 or 4 pips, which we're used to when we pay our spreads anyway. This was certainly a good trade where you would not have been you would not have been in any danger whatsoever once this went to a negative 20 imbalance. Now, I get a lot of questions from students because I always feel like, and I haven't talked a lot about money management yet, but you know, the one-to-one risk reward is a minimum. I know a lot of you like to look for larger profit points. You know, another thing that you can do, and let me just pull this up. I haven't talked enough about this, but you know, one of the other things that PitView is good for is finding larger profit levels in your trades. You know, our limit, we were looking for a one-to-one risk reward. That is always a minimum that I personally use in short-term trading. It doesn't mean that I'm not going to look for more profit. It just means that I want to make back at least what I'm risking on a trade. That's called a square deal with the market, by the way. That means when you're looking to just make back whatever you're risking in the market, that's called a square deal. In this case, we were risking 18.5 to make 18.5. Now, some of you are newer to PitView. Some of you are a little bit more experienced. Your other opportunity, and I've talked about this before from a trade management standpoint when you're using PitView, is what you can also look for is you can look for the pair view totals You can look for the 5-minute and 1-minute totals. What we call the opposing signal, if you will. What do we mean by opposing signal? Well, our sell entry is when the 5-minute and 1-minute pair view both show, the totals both show a negative 20 imbalance. In this case, we could wait until the 5-minute and 1-minute go to a plus 20, which would be an opposing signal. Now, for me, I went ahead and closed this out for a little bit more. I actually risked 18.5. I ended up making about 36. I made a 1-to-2 risk-reward ratio trade. We can get into different exit strategies in a little bit, but one very popular way to use pair view is if you look for the opposing signal. What that means is, since you use the negative 20 and on the 5 and 1 minute to get into the trade, you could use a positive 20 to get out of the trade. Right in here, now I just looked for, I made about 36 on this one, but right in here where this green arrow is, that's where the pair view totals actually went to a positive 20. I watched it all through here. I wasn't staring at it all day. Remember, this is a 1-minute chart. This is only about a half hour later after we got our sell signal. Here's our 1-to-1 risk reward. It could have been good for another 30 pips or so. There's a lot of things that go into kind of more discretionary trading, if you will, but you know, one of the things was when it got down to these levels, you can see it almost makes a Gartley pattern right in here. It goes to a 78.6% retracement of the news trade from the previous low. These are all things that we've talked about as far as 78.6 retracements. So I took off my trade. I stayed into it mainly because the pair view totals were still showing extreme sell imbalances all throughout this time. But right in here is where it went to a plus, before it even made the move up, it did show a plus 20 on the 1 minute and a plus 20 on the 5 minute. So this would have been where if you were looking to make that alternative exit strategy of just waiting for the pair view to show the opposing signal, it could have damn near gotten you out at the peak bottom right in here. And you can see this is what the euro dollar did for the rest of the day. It actually went back up slightly before tanking somewhat again on Friday. It actually went down. Let me go to the 5 minute and show you. It tanked again on Friday. This wasn't part of our news trade, but this was the non-farm payroll number. Came right back up, but then tanked again on Friday on the non-farm payroll. If you're wondering, yeah, right before the non-farm payroll, we would have had a negative 20 imbalance on the 5 minute and 1 minute. This actually would have given a sell trade. But remember, we're not done with news trading. I've got a part 2 coming up here in a couple of weeks where we'll go through how to be able to capture some of these bigger trades. But non-farm payroll was obviously good for the dollar, bad for the euro. But there was our news trade if you want to take a look at it on the 5-minute charts. We executed it off the 1-minute charts, but you can see it was a perfect little sell entry where we would have gotten a nice little profit point on it. So good trade all in all. When you add that into the, let's see, the week before on our swing trading methods on the 1-hour charts, we had a total of, what was it? We had a total of about 150 pips on the 2 trades. So that puts us at least about 170 pips over the last 2 weeks of using PitView to get in and out of our trades there. And we haven't really had any losers. We just had a couple of trades that didn't execute, and thanks to PitView, they didn't execute. So yeah, it was a good trading all the way around. All right, so there was a little bit of market review from our news trading strategy. That is a PitView specific trading method also. We're using pair view totals to tell us if we should enter into a trade or not. So today's class, and it is a 2-part class. Today I'm just going to go through a very simple. I figured since we were going to review the news trade that I wouldn't have a huge amount of time, probably only about a half hour, and that is true. I only got about 35 minutes left in the class. It may not be a 2-part series. I may have to go 3 parts, but I'm sure most of you don't mind that too much of going to 3 parts in our little education series. And remember, coming up here soon, we'll be going through a little bit more on. We'll be going through more live trading together. I really like doing live trading with all you folks, and I know you enjoyed doing it also. So we'll be starting that here in a couple of weeks. I'll be making an announcement soon. If you have any questions, you can shoot me an email. So PitView Trading Methods presented by Steve Nuri. Most of you know me at this point. See some familiar faces in here. So PitView Trading Methods, again, we've talked quite a bit about using PitView as a confirmation tool. If you have your underlying strategies that you already like to trade, then using PitView as a confirmation on those strategies, for one thing, it can increase the probability of your trading method, because when you do get buy or sell signals, you know that you have the confidence that you're trading along with the big money in the market, which is what all the retail traders want, right? But how do we use PitView as a standalone entry method? How do we use PitView on its own, just like we did in those news trades, to get into trades? Well, first, let's understand market makers. We've gone through this a little bit before, but I want to make sure that we're all on the same page before we get into our first little short-term strategy here. Over the long term, market makers ideally want their books to be as close to 50-50 as possible. Now, what that means is, because PitView is measuring the buy and sell imbalances from market makers, the more data that you're looking at in your pair view, in your global view, in your group view, the more data that you look back at, whether it be, some of you like 1 minute, 5 minute, 15 minute, 1 hour, 4 hour, and then some of you might like to go all the way up to like 24 hours. But the more data you look at, over the long term, market makers ideally want their books to be as close to 50-50 as possible. Now, it's very difficult because when you look at the entire amount of buy and sell imbalances going through the market, generally speaking, over the long term, their results will never be really exactly 50-50. They'll be skewed a little bit towards what their overall positions are from probably the traders inside the banks themselves. So what that means is the longer the time frame you're looking at, the smaller the imbalances you look for in order to give you good solid entry triggers on PitView. So let's take a look at what some simple entry triggers would be as far as the buy and sell imbalances. Over the short term, and when I look at this, I'm going based on some of the more common, for example, MetaTrader 4 time frames, or the most common time frames shown on your chart. A lot of times what I look for good solid PitView entry triggers is over the short term, and let me grab my little ink pen right in here. If I'm using 1 minute to 15-minute charts, what I'm generally going to look for as far as the buy and sell imbalances in pair view is when you get a +20 imbalance, that is considered to be a nice entry trigger into the market. I mean, that is showing you that there's true underlying movement within the market makers. They are acquiring positions. That means that their bid, their activities at the bid outweigh their activities on the ask by 20%. And right here under the negative 20, this would be considered our sell imbalance. This would be considered a market moving sell imbalance over the short term. Now, as we get a little bit longer in our time frames, we'll concentrate on, I'm going to show you one method here today. And once we get this one method down, I think you'll be very comfortable with moving on to some other methods. We can move on to our more medium-term time frames or our swing trading time frames, which I know a lot of you really enjoyed going through some swing trading. That's what we went through for about 2 or 3 weeks. On the 1 hour and 4 hour charts, we look for a +5 or a -5. Now, because we're looking at more data over over longer time frames, we look for smaller imbalances to trigger what would be considered an actual, trigger-worthy buy imbalance or a trigger-worthy sell imbalance, if you will. And so what we're looking for there is, again, we're looking for a +5. That would be a green 5 on the PitView platform, or a -5 if we're using between 1 and 4 hour time frames on the pair view. And then on the longer term charts, if we go above 8 hours, and we can go all the way up to 24 hours, as far as what I'm going to be teaching you is as far as trading methods, you might be thinking to yourself, why would we look at a 24-hour PitView? We'll probably get into that next Monday when I'm going to go through a little bit on what I call my global view night train system, to where you look at global view and group view together. And I may even introduce total view at that point to you. In fact, I will. A new little indicator that we use to show you the 24 hours and how we can view long-term strength and weakness in the markets to make a trading decision. It's a set and forget strategy. But if we're looking at the longer-term PitView numbers, all we really need is green or red. Not to sound like some of those old Forex education companies where they had like green or red arrows or green or red lights. Remember, we are looking at imbalance totals from the market makers, and the longer amount of time that we look at, we just want to know if we're looking at a 24-hour pair view, for example, in the total section, is what I'm going to be using for our examples. If they're green, they're buying. If they're red, they're more on the sell side of the equation over the long term. So we're going to start off, of course, looking at more of a short-term type of method. And it should only take me about 20-25 minutes or so to show you this, because I'll go live to the charts to show you how to set this up also. This is what I call the 5-minute range reversal method, and this is a PitView trading method. You need pair view in order to execute this, because this gives you some great reversals in the market on the 5-minute charts. So the time frame that we're looking at is we're looking at a 5-minute chart. Obviously, this is a shorter term method. The PitView indicator that we're using, or the PitView tool, is we're just going to use the pair view 5-minute totals. Now, your question might be, well, what pair do we trade with this? We can trade any pair with this. For those of you who've been through like the 3-step process, and now we have a 2-step process using total view, part of what we can do before we even get into this strategy is obviously pick a pair, if you will. And don't worry, we'll go more into that as we go along, but I just want to give you the black and white rules for this method. We're just going to keep this very simple. We're going to use the pair view 5-minute totals. And the only thing we're going to use on the chart is price. We're not going to use any indicators or any patterns from the chart. We're just going to use price itself. We're going to use the range. Now, some of you might look at the ATR as being a technical indicator. I don't really consider it to be a technical indicator, because all it's doing is giving you an example or a view of what the range is. And that's this range filter right in here. You could also call that a price filter, because we're using just the pair view to get in and out of our trades. The price filter is just something to where we want to take all probability out of the equation of a counter directional movement on our trading method. If you're confused on that, don't worry. I tend to be very repetitive, so we'll go through that. There's some very simple steps to trading this method. The 5-minute range reversal method starts off with step 1, which is find the 30-day ATR. to put it quite simple with you, find the range. Find the average range for a currency pair over a given period of time. When I go into a trading day, what I want, and I used to do this manually via an Excel spreadsheet. What I want to do is I want to have some type of idea of how much can a currency move in a given day. If we know the range, that can tell us so much when it comes to consolidation, momentum, and reversal. Because we've talked about this before in class, but the myth about the Forex markets is people will try to talk about Forex like it moves an unlimited amount of pips each day. And that's just not the case. The Forex market tends to only move a certain amount of pips each day. And we need to know that first and foremost when we get into trading any type of method intraday in the market. So you might be wondering, how do we pull up the 30-day ATR on a daily chart? I assume a lot of you use MT4 MetaTrader. That's where I get most of my questions from, is from people that use MetaTrader 4, but this is applicable to any type of technical analysis software that you have. Pick your pair that you're going to trade. In this case, we're going to use an example off the euro-dollar pair. You're going to pull up the average true range, the ATR. So you're going to go to Insert Indicators, pull up the average true range. You're going to set your input level to 30. And all you want to do is, as of the time that you're trading, find the current ATR number, which is the current range. So in this case, if I go into the euro dollar to show you how to do this, and we'll go live and I'll show you how to put this in. The 30-day ATR is 80 pips. The way we do that is, you see up here I have the euro dollar and I have it pulled up on a daily chart. And I go into the ATR. I go to 30 periods and it's showing 80. You see where it says 0.0080? That's telling you the current number. So what is that number telling you? It's telling you for the average, for the last 30 days, the average move from peak low to peak high, from absolute low to absolute high in a 24-hour period, in a single trading day on the euro dollar, which is normally going to be from 5 p.m. Eastern to 5 p.m. Eastern, that 24-hour trading day. The euro dollar moves on average 80 pips. Now, why is that number important? Well, we'll get into that here in just a second. But in order for us to get a reversal trade, we want to make sure that the move has been extended by a certain amount of that range before we look for pair view to give us an entry signal. So let me go in and show you this real quick of how we use this as a trade filter. Okay, this 80 pips. So keep a mental note of that 80 pips here. So step 2 is our range filter. Now, mind you, we haven't even pulled up pair view yet, but we're going to pull up pair view here in just a second. That's what we use to enter into the trade. Once we know the range, we don't need anything else on our chart except for, just the 5-minute chart up and just the pair view. Those are the only two things we need after we find this number. But the reason why we pull up that range is we have what's called a range filter. This is what we call a trade filter, folks. What is a trade filter? It's a condition you put on your strategy. It's an underlying condition that has to be met that can optimize a trading method, a trading strategy. So what is our range filter for this? Well, what it means is from the start of day, which is 5 p.m. Eastern time, or on MetaTrader 4, depending on what data server you use, it should be set at 0, should be set to 5 p.m. Eastern. You're going to pull up your 5-minute chart. And what you're going to look for is you're going to wait for the underlying price to move 80% of the 30-day ATR, whatever the 30-day ATR number is. Once price hits 80% of whatever that 30-day ATR number is, that's where you're going to start looking for your entry using pair view. I know some of you have gotten used to seeing my little ink pen on here. I just like being able to underline things when I go through them. You should see the way I underline books when I read trading books or any book. So anyway, what does this range filter look like? Well, once we have that ATR number, the 30-day ATR number, so right in here, okay, we know that the ATR is 80 pips. What does that 80 pips tell us? That 80 pips tells us that, as you go into your trading day, when you're looking for, in this case, the euro dollar, you're saying, okay, what is my expectation of how much on average the euro dollar can move in a 24-hour period? from its low price to its high price, essentially. And if the average is 80 pips, what this does is it gives you a it gives you a great indicator of when the market gets into what we call an overdone condition. What is an overdone condition? Well, first let me explain what one of the main mistakes or errors that traders make in their trading. You see, Johnny US trader might wake up here or in the morning, or somebody in London might wake up in the morning here on the euro dollar, and they might see that the euro dollar is moving straight up, okay, from this level to this level. And so they wake up in here. And so the people that think that the Forex market moves an unlimited amount of pips each day, they'll look at this trend, you know, this series of higher highs and higher lows going down and through here, and they'll say, okay, I trade with the trend because the trend is my friend. So they'll wake up here, like during the London morning, the European morning, and they'll say, okay, well, I'm going to buy euro dollar. However, if the euro dollar has already extended a certain amount of its movement, if we know it only moves an average of 80 pips a day, and it's already moved in this case, from this low to this high right in here, it's already exceeded about, you look at 64 pips, this low right here for the day to this high, you see that's 64 pips right in there. It's already exceeded 80% of its range for the day once it hits up here. Now think about this in terms of probability. Okay, that's what trading is. It's not perfect, but we deal in probabilities. If something only moves 80 pips a day and it's already moved 64 pips to the upside when it hits this high, what's the probability of it making any type of significant move higher? Probably pretty low. So if you're looking for this to go up any higher, the probability, you know, there's negative probability of it moving up that much higher from that level because it's exceeded the majority of its range for today. So remember, the market can only go three directions. It can go up, down, or sideways, right? So once it's exceeded that amount of its range, we've kind of taken this out of the equation, right? We've kind of taken the upward movement out of the equation. And now that it's exceeded 80% of its range for the day, that only leaves two directions from a probability standpoint. So that's our range filter. You can see this is the low for the day. That red line right in here, by the way, this is the start of day. That's right before 5 p.m. Eastern time. So from this low to this high, it's exceeded 80%. At the point that it hits this number up in here, when it's moved this 64 pips, that's when we can pull up our pair view and start looking for a short entry to go short into the market. Now, just like we used in our news trading example, is our entry on this, once our range filter is hit, is our buy entry on this would be if the 5-minute total imbalance goes to a positive 20. Our sell entry on this would be the 5-minute total imbalance going to a negative 20. And if you're confused, don't worry. We're going to go live in here and I'll show this to you. So once the range filter is hit, if we're looking to take buys, we look for a positive 20 in the 5-minute totals. If we're looking to place sells, we're going to look for a negative 20. So let's go in here and take a look at what this looks like in our trading screen. Some of you may look at this and see it looks a little bit familiar to some of our short-term trading methods. If you remember correctly, in the short-term trading methods we went over several months ago, we used a moving average crossover and used pair view to confirm the trade. In this case, we're using pair view to actually enter the trade. So that's the big difference because it's going to give us earlier in the 9 times out of 10, it's going to give you an earlier entry signal, a much more clear and early entry signal into your trade. So here's an example of having the pair view up on your screen. So when you look up in here, okay, here's our pair view total. So from this low right in here to this high, it met our range filter. It's already moved 80% of the range. And then right here, this is where I took the snapshot of the pair view. You see that the 5-minute, and I look at the T's, and I know some of us look at the leading, the following. I'm looking at the total section in here. You see the total section goes to a negative 21.23. Now you can see how powerful PitView can be. It goes up, it comes down, it goes up, it's coming down. It hasn't even broken a low yet. No moving average or stochastic or MACD has given you a sell signal yet on this at this point. PitView has gone, however, the PitView 5-minute total has gone to a negative 21.23. So our action here is that's where we get our sell entry, is once the PitView goes to negative 20 or more, or less, I should say, than that, than the negative 20 imbalance, that's where we're entering into our trade. So that's our sell entry. So sell entry is going to be right in there. Whoops. I guess I had it on there already. Sorry, I had it popped up on the PowerPoint. So sell entry is 1.26635. That would have been our approximate sell entry when I was viewing this. This is not a. This is just a trade from last Thursday. Also, another one that I took. So 1.26635 is our sell entry. Sorry, I can probably erase my little SE right in there. So that only leaves us one thing. Now, is that very difficult? Is that hard to do? Most of you that are familiar with PitView, you know how to pull up the PitView. You know how to pull up a 5-minute total. You know how to, I know most of you know how to look at a chart. And from here, all we have to do is just look for a certain amount of move, and then we start looking for our entry. So this is not difficult at all. This is just a very simple reversal trading method. The exit in here, the stop order, we're looking for a greater than 20%. The stop order gets a little tricky because one of the things that you look at with PitView is that sometimes PitView can give us such an early entry into the trade. Is that a good thing? Yes, it's a freaking awesome thing. Since we're not looking for like moving averages to turn or MACDs or stochastics, and we're using the PitView, which PitView is probably the ultimate leading indicator for reversals in the market that I know of, because it can turn so fast and give you such an early entry into your trade, a good solid early entry I might add, then the stop orders can be a little bit tricky because we want to make sure that when the market turns that we give ourselves enough room to make at least a nice little intraday profit on our trade. So the stop order, which I'll go through here in just a little bit, the stop order would be a greater of 20% of the 30-day ATR or 1 pip above the peak high. Now, what do we mean by those two things? Well, here, let me show you. 20% of the 30-day ATR, in this case, 20% of 80 pips, is your stop order is going to be at least 16 pips away. Why? Because we look for that minimum of 1-to-1 risk reward when it comes to our profit taking, and we want to be able to make some pretty nice profits on these trades. Or 1 pip above the peak high would be our other alternative. When we get a sell signal, we would go to the previous peak high of the actual daily movement or the peak low for a buy entry. Our limit order would be a 1-to-1 risk reward. At the very minimum, we want to make back what we're risking on the trade, or the opposing signal. Now, since this is a trade that I recently placed, let me go in and I'll show you what this looks like on the screen of how this would have been measured, and hopefully it'll give you a little bit of clarity, if you will. So let me go in here. When it comes to the exits, there's only 3 steps. Only 3 steps to this trading method. Step 1, filter. Obviously we'll look for the ATR. There's 4 steps actually. I think I got the numbers mixed up in here. This should actually probably be step 4, exit. So step 1 is the ATR. Use the ATR as a filter. I kind of put those together in my head though. And then step 2 is look for your entry, and then step 3, look for your exit. So let me go in and show you what this looks like on a chart. No, we're not done with class yet, Mr. PowerPoint, because I want to go live. Most of you that know me well enough know I really like going live into the charts. Let me just go from a blank chart at this point. Let me take I got a lot of objects drawn in this chart from our last little class we did live. And let me pull up the euro dollar and I'll show you an example of going through this trading method. Good, I got about 10 minutes left. I wanted to go live. And let me go ahead and I'll pull up a new notepad here. So the step, we're going to go through the Euro USD example from this is from last Thursday also, from October, I should say from October 2nd. Step 1, we want to pull up the 30-day ATR, find the 30-day ATR. So for step 1, we want to pull up a daily chart. We want to insert the average true range, and then our input period is going to be 30. All right, so I pulled up the euro dollar pair. I'm going to change this to a daily chart, okay? And you can zoom out on these charts if you wish a little bit. Let me pull this over. So euro dollar daily chart, I go to insert indicators, average true range. The average true range, remember, this is just going to give us an idea of how much these things move. That's all it does. So insert indicators ATR, period 30. So when you pull that up on the daily chart, what it will do is over here under the ATR, it'll show you what the current ATR is. Like in this case, 80 pips. Okay. Yeah, it hasn't changed much from last week. It was at 80 pips last week also, from last Thursday, if you will. But this number right in here, they're always going to show you what that ATR number is in pips. So when it says ATR 30 on the daily charts and it says 0.0080, that means 80 pips is the average range for the previous 30 days. So in this case, this is exactly like our PowerPoint, because as you know, I like to use recent examples so that people don't ever think that I'm using ideal examples. 80 pips. After we know that ATR number, we don't need it anymore. In fact, we can take that off the screen. If I go up to my indicator list, I can go ahead and delete that off. Because like I said, we don't need anything but the pair view on our screen at this point. So now I can change, and that's the only number I need. Remember, we're trading off of a 5-minute chart here, okay? So I don't need anything else on the chart now. I can just use my 5-minute chart. And let me just go ahead and go back to last Thursday when this trade executed. And this should look very much similar to the PowerPoint because this is a trade from last Thursday. On the MetaTrader platform, 2400 or 0 hours is going to be the start of day. So I always put a red line right before that. So now that we know the 30-day ATR is 80 pips, step 2 is our range filter. Look for price to move 80% of the 30-day ATR. So if you look for that, 80% of 80 pips, 80% of 80 pips is 64 pips. Now when you're looking at this on the chart, when you see, obviously when you're looking at moves that are occurring such as this one, here's the start of day, that red line, you know, you have a very tight range that can form. It's really, here's our swing low. This is the low it reached right after 5 p.m. So this is our low. So we can go ahead and put We'll put a little thumbs down. There's our low price. But where we start looking for reversals is when the market has made a large significant move. So in this case, here's its high. But as it starts making what we call a momentous move from the start of day, 64 pips, you can see if I go from this low to this high, look at that. It reaches 64.6 pips at this point from this low to this high. So right in here, this is where we would start looking for our entry. Right at that black line, right when it reaches that high. Now I know what some of you are thinking. You're thinking, well, this is a PitView class, Steve. Well, yeah, pair view is the most important part of this because pair view is what gives us those freaking luscious entry signals, right? This is what we use to get an earlier entry into the market. The thing is that I wanted to show you that trading with PitView is not a hard thing to do. It's actually very simple. To get to this point, we can use the three-step method to look for individual pairs that are moving. But trading with PitView is so unbelievably easy, it's not even funny when you know what you're looking for on the charts. So here, let me pull up my PitView, and you tell me if this is difficult or not. I'm going to go over here. I have my PitView up. I'm going to go up here under Indicators, and I'm going to go to Open My Pair View window. Okay? I'm going to go and open my Pair View window. And look how I have my pair view window. Now what creates a lot of analysis paralysis with people is when they see so many different columns on their pair view window like this. You know, they might see the pair view come up like this, for example. And that can create, you know, a little bit of analysis paralysis, but also, wow, look, a large imbalance on the 5-minute here. We'll take a look at that here in just a second to see if it's giving us any current trades. But remember what I do. If I'm just looking for the total, it doesn't have to be any harder than just this if you're looking for an entry. I'm trading off a 5-minute chart. I'm waiting for the 5-minute totals to go to a -20. Right now it's at a +20, but in this case, our sell entry, if you remember from the PowerPoint, was right in here when it went to a negative. But I wanted to show you how to pull up that 5-minute. It obviously went to a +20. We'll look at the right now market here in just a second. And I wrote it down here on the PowerPoint. Let me pause. Let me take a look at the PowerPoint. Sell entry 26635. Sorry, my screen like paused right in here. If you remember from the PowerPoint, I actually do have the 5-minute. I show you what the 5-minute T looked like at the time. It was a -21.23 when we got that big sell entry here. All right. So there was our sell entry right there at the green arrow. Our stop order. That's what's going to, you know, kind of be a little bit, it's going to be a bit confusing for people as far as a stop order. But step 3 is your entry. You know, you pull up your pair view. That's why I pulled up that pull up pair view 5-minute total. Again, this is a very easy one. So our sell entry on this was 1.26635. Our stop order is the greater of 20% of the 30-day ATR, or 1 pip above the previous swing high. So when you look at this, first let's figure out what we have. The 30-day ATR right in here. So the 30-day ATR means that 20% of 80 pips is 16 pips. So that's our minimum. This is our minimum stop order. This is the minimum amount. We want to give ourselves a lot of time to be able to, we want to give ourselves some room to be able to make a nice little pip movement. Risking 16 to make 16 pips. Remember, we're also using our percentage rules to make sure we don't risk more than 2 or 3% of our account at this point. So risking 16 to make 16. At the point in which we get this, our sell entry at 26635, our high right up in here is 1.26732. So 1 pip above the high, 1.26732. We'd want to add our 2 pips for spread and put it at least 1 pip above that number. So in this case, 1.26762. So when we look at the greater of, here's our entry, 1.26635. If we're going to put our stop 16 pips away, 26635 plus 16 pips is 1.26795. All right, that would be our stop using just 20% of the ATR, and we want to use the greater of those two numbers. Putting it 1 pip above the high is 26762. Here we put it at 26795. Now this may sound funky to you, but the thing is that our stop order, we want to make sure that, for one thing, we want to give ourselves enough room to make a nice profit. You know, 1-to-1 risk reward being a very nice little profit. We want to look for that as a minimum. We also want to make sure that, because the PitView can give us such early entry signals. Like I've seen PitView before on the PairView screen, it'll go to a -20. You might be, what I'm talking about right now, folks, is this right in here. Sometimes the PairView can go to a -20 and give you a sell signal on this, like up here. So in that case, you'd be putting your stop like 3 or 4 pips away. And if you're looking for a minimum of 1-to-1 risk reward on your profit taking level, you don't want to just risk 3 pips to make 3 pips, right? So because the good thing about PairView is the fact that it can give you such early entry signals. So and kind of lead the market. So when it does lead the market, the only question becomes for you is, how far away should I put my stop? You know, we never want to put our stops too tight. So that's why we use this little parameter right in here. And we'll go ahead and put this in. I'll make this step 4, which is our exit, so that we go along with the PowerPoint. You can see this is not a very difficult strategy in which to trade. And then our limit, we would be looking for we either look for a minimum of 1-to-1 risk reward. So in this case, we'd be looking to make 16 pips. Since we're going to use this is our actual stop order right here, 16 pips away. So in this case, our stop order would be at 1.26635 minus 16 pips. So 26475. All right. Or the opposing signal, which would be the PitView going to, if we used a -20% on the totals, we'd wait for a positive 20 to occur. You know, when you look at the actual imbalance themselves, you can see that we got a nice little reversal right in here in the market. So our 1-to-1 risk reward was easily hit on this. You can see it went down a total of another about 30, 35, 40 pips to the downside. people always scoff at a 1-to-1 risk reward. I look at a 1-to-1 risk reward as being 100% return on my money. You risk 16 pips to make 16 pips. Remember, we're putting up we're not just doing, some of us aren't doing more than one micro lot on these or one mini lot or one standard lot. Some of us are doing several, and we're risking a certain percentage of our account to do it. So this 5-minute totals, like right in here, is what we would look for to give us, you can look for that opposing signal. But I always give we'll go through more on money management and scaling out of trades. Scaling out is another option that you have, but that's another thing that we can look at a later time. When we see this positive 20 occur right in here, this is what we were looking at from this morning. We're still looking at an ATR of about, on the ATR, it's about 80 pips right now from the start of day. So we would look for this to move, it's still 80 pips, so we would look for this to move 64 pips to the upside to give us a sell signal. It hasn't quite reached that 64 pips yet to where it would give us a sell entry for this reversal. So PitView right now is actually giving us it's still in buy mode. And you can see PairView has been green this entire time that we've been looking at it. So what we would look for on the 64 pips is from the low of the day to the high of the day. It's kind of odd. PairView is still showing green and it hasn't hit our trigger target yet. 64 pips is actually right up in here. So it'd be right up in here. This is where it would have to get to in order for us to get a reversal entry on the euro dollar. So this right in here, this red line is about 64 pips away from this low right down in here. And once it hits that red line, we can go in and start looking for sell orders. We can start looking for this 5-minute total to go to a red, a negative 20 for the day. But not until it hits that trade filter, not until it hits at least 80% of the ATR. The reason why is because it still has room to go to the upside. PitView, now don't get too far ahead of us here. This is what we call trading reversals in the market. That's the subject matter for the day. Okay. So we have other ways in which we can trade the market. Scalping, we can look for plus 20s, negative 20s all day long to buy and sell. I'm just giving you an actual trading strategy using a set amount of parameters. And in fact, it's an old trading method that I used to have where I used to use a moving average crossover to get into this type of trade. Now I don't. I just use PairView. I don't need moving averages on there. I put PairView up, and it gives me great signals on this trade, on this trading method. So it's a standalone strategy. As long as if you're trading individual pairs, you can use the 3-step method to find individual pairs to trade. But this is a great example, and don't worry, our strategies are going to get a little bit more complex from here than from just looking at a 5-minute totals on your PairView screen. I'll get a little bit more complicated than that. I just wanted to show you one of the easier ones first. And as we go through the rest of the presentation, which again, this is supposed to be a 2-step or a 2-part presentation. It's probably going to be more like 3 parts, much like our news trading presentation. But we'll get there. Don't worry. I've gone about 6 minutes over because we went live in here to look at this last chart. But it's a very simple strategy, very simple way to use PairView, a very powerful way to use PairView. Coming up next week, this is an example of short-term reversals. We'll start getting more into short-term momentum, of how to trade momentum. We'll get into some other scalping strategies. We'll get into some more medium-term swing trading strategies and also some longer-term strategies utilizing PairView. That'll all be part of our presentation going forward into next Monday, and even the Monday after that we'll probably add another section of this, because there are so many ways to utilize this tool. It's not even funny. It's so powerful, and it gives you such great entries into your trades that it's so simple to use also. You know, you're just looking at a green or a red and a buy or a sell imbalance to occur by a certain amount, and it's just very powerful the way it's done. If you do have any questions, like I said, you can always email me at steve.nuri@pitview.com. If you haven't subscribed to PitView yet, after our 170 pips for the last several weeks that we've had using PitView, I don't see how you're not subscribed to it yet. It would have already almost paid for itself, depending on the size of your account at this point. You can go to www.pitview.com/web to subscribe, or to start your free trial if you have not started a free trial yet. If you're in the intermediate class, you should already be a subscriber. And if you want to get into the live trading that will be starting here pretty soon, also definitely want to be a subscriber. But if you haven't tried it out yet, then by all means, go into pitview.com, look at some of my basic classes under the university, and give PitView a shot, because it's a phenomenal way to trade with the big money. Till next time, till next Monday, this is Steve Nuri, your instructor. I hope you all enjoyed trading that European Central Bank announcement, and enjoyed the very simple reversal strategy utilizing PitView. For you intermediate students, I'll be checking you out next week, next Monday, when we continue on with more individual trading methods. So have a great week, everybody, and I will talk to you later. Bye-bye.